So I'm going to be explaining things about Fibonacci and how to use it and how I myself personally use it. So if this is your first time joining Tega Liquidators channel, do well to subscribe to this channel, like this video, share your thoughts on the comment section and what you feel like I should talk more for you on the next video, right? So I'm going to be talking about Fibonacci and how I use it and the difference between fair value gap and reasons I don't usually take fair value gap and I prefer taking trades from the blocks, which is like the order block and the breaker blocks, right? So we have class coming up on November. That is going to be the end of the year class. So this is going to be the last class I'm having this year, which is November class, and it's coming up. And the link is going to be on the description. If you're interested to join the class, you can click on the link and join the class. And here is the group where you're going to be joining. So once you make your payments, I approve you to join in and participate on the class coming up on November, right? So the fee there is just $100. I don't want to talk much about it. Let's just talk straight to what we're here to learn. So once again, subscribe to this channel and pay very much attention. Watch this video from beginning to what the end. So my videos, I like starting from the higher time frame. If you have actually been following me, you come to understand how I use higher time frames. So this video, I'm trying to talk more on Fibonacci's for some people that has been asking me how I use Fibonacci's. Let me tell you and show you the particular way I myself use Fibonacci's and how it works for me. So, sorry. So when it comes to Fibonacci, there are two major ways people use Fibonacci, which some people use it both on the lower time frame and the higher time frame. But in the series that you have the lower time frame and the higher time frame, you need to like align together, make it match together, make it look very much possible. What I mean by that is when you have a series of a weak liquidity, which we call external liquidity, two external liquidities, which is what we are seeing here. You can see from the down to this very high is actually external liquidities, which is where we are actually expecting market to take out either the upside or the downside. But how do you think you are marking it on the right way, right? So you can see sometimes market doesn't even come back to the zone. So what we do is to make sure we are aligning it with the current break in market structure, which is what this should be the after the break of structure. This should be the nice and the very particular level you should expect market to reverse into your discount level before thinking on taking trades, right? So this is why I don't use Fibonacci's very much, because why? At times market doesn't really used to tip in or come inside the discount level and keep on buying. So this is why I talk more of breaker blocks and other blocks, right? So now this is the present and the current level, which you can see market on inside a discount level, right? So this one, you can see that the market have a break of structure. After a break of structure, you see market pushed up and pulls back, and it's in between the discount and premium level. We are having a key point, which is my order block. So let me literally draw the order block out, or a breaker block, whichever name you feel like calling it. This is good actually. So good structures are kind of like facing bullish. It doesn't give that kind of structure you expect, but if you have eyes, you can actually spot it yourself. So make sure you watch this video from beginning to the end. Make sure you check others videos I have, and in case you can actually learn more. So when you confirm that the market is on your discount or premium level, what you need to do is go down to your lower time frame. So you can see on the series here, both the trades I took last week. I have a lot of trade last week, right? And I lost one trade also last week. So I took my first trade at this level, but I think I deleted it, so I need to put it back. So I deleted before now. So I took this trade that should be I think Tuesday, Wednesday. Yeah. So I took this trade Tuesday, Wednesday. Yeah, it was on Tuesday. Then I took the second one on Wednesday. Yeah. So that was how I traded it. Tuesday and Wednesday. So it was on Wednesday that the market gets to my TP, and the TP was actually able to get to that level, I think around midnight. So I allowed the market do its thing. Then I took another trade on the 15 minutes, continuing the trend. So this is why gold is actually cool. But you must take your trade when you know your directional bias. You don't just take trade. And this was just like 1:10. So I actually risk $100. So I made $10,000 from this particular trade. So I was not able to hold it all the way to the upside because I'm following my daily setting plans. So I have plans for my trades. So that was what happened. So waking up the next day, which was on Friday, market attempt to like dip in to the level but failed. But you can see after then New York came the next day, which is that same Friday, and actually destroyed it. A lot of sellers momentum came in because of what we are actually on the level we are expecting market to drop so far, like to have a correction, like let's get some correction. So that was why market was able to destroy the level that we're expecting to buy from, right? So now talking about when market is on your key level. So you guys know me very well that I work with order blocks or breaker blocks. So you can see very well here that we have what we can call either an order block or a breaker block. So I'm going to call this an order block, right? So in a much of that, so I waited for market to flag bullish. So before I start looking out for a trade, I initially wanted to take trade from the 15 minutes, but I didn't take it because of what is Friday. So there are high possibility that market is going to be closing. So that was why I did not take it, but I waited for market to flag bullish. So you can confirm it. Once market flag bullish, people in my class already know what I say. Whenever you see a flag of bullish to the upside from the higher time frame, you already know what to look at for. So if you check from the daily time frame, now let me explain what's going to be happening next. So if you come to understand, we have a fair value gap level which the market filled on Friday. So we filled a fair value gap level and rejected, closed inside the first candle of the fair value gap, so which you can see very much there. So we are expecting next week to keep on buying because of the rejection we are seeing on it, right? So on the weekly time frame, you can say the market gave us a rejection but not a clean rejection, so we are still bullish. So I'm still expecting market to keep pushing by next week to the upside. So I'm expecting to keep buying from next week. So now after confirming that, the only thing I need to do is go down to the lower time frames and have my setups. So when we talk about structures, there are multiple kind of structures and how to count them and add them up together with your liquidity. So let me just delete this trade that failed. So you can see here I delete this and this inducement as well. So you can see very much here that this is the setup we're seeing, and assuming the market broke it earlier on Friday, we could have seen a rejection. Market could have be giving us a rejection right now, but market didn't close on time. So these are structures I look out for reverse trade. So I'm trying to reverse when you have a series of lower high and high highs, want to reverse trade to the upside again. So these are structures I need to see, either an order block, but it should give me a structure looking like this. I need to see inducement. That's my liquidity. You know what I'm saying? Like, need to see such things so I can actually take the trade. And this is another structure liquidity I can actually look out for. And if I see something like this, I can still take my trades from there, right? So I'm talking about reverse trade. So you can see here we have sold all the way. So we're expecting to keep buying again, right? So that was what I mean. So okay, let me show you the series of breaker blocks. So let me say I have a series of a low high, a breakout, and inducement, which is the first pullback. And if market comes back to that level, I take my buy, right? So this particular setup naturally happened on USD, but didn't tap us in on Friday, so I let it be because the week is already running out, right? So before tomorrow opens, I'll be ready waiting for it on my Meta 5, and I'm going to show you guys by this week I should be able to pass the challenge funded account I gotten and show you guys how possible it can to pass it. I just have a few dollars now to add up to it, and the account will actually be passed. So a lot of people have been asking me, did I trade Profim? You can actually trade Profim depending on your stable line, which is the level you are right now, right? So I just needed to like try it to see how possibility I can actually get funded or get paid in weeks. Like my friends, people that trade it actually tell me how it works, right? But we're literally gonna be saying it later on, so it will probably be my next video if the thing actually went well or went to SL. So that's it. So now talking about this structure, this is exactly what is happening right now. So if you see here, we have this low, high, lower low, and what market started giving us a correction, which is pushing up. And after then, we have inside liquidity, that's inside bar inducement. The market is pushing towards to take out a structure. And if market take that structure and push back into this level, it's a nice A setup to take that trade from there. So this is all I can actually see right now on gold. And I don't have any other pair right now I'm planning on trading for this week, or accept USD JPY. And these two, I think they are quite cool because whenever gold is actually buying, USD JPY is gonna be selling. So I think I love these two right now, and I think I'm going to be focusing on it. I'm not going to be talking about BTC for now because BTC is kind of like crazy. The directions, it will buy today, it will buy tomorrow, it will sell. I don't know the direction right now, so we need to be careful when it comes to BTC. So that's why I'm not talking more about BTC right now. But it's not that BTC is bad to trade.